All right. Hi, everyone. Thank you very much for coming along today. We really appreciate it. This is the BuytoLet webinar, of course. So my name is Karen and I'm from the marketing team at ESPC, and I'll be hosting today's event. The format of the event, we'll go over to Nikki, who'll give us a market update and provide you with all the latest and update news on BuytoLet. Then we'll go over to our Q&A session, will be held by all of our panelists. And thank you to those who submitted the questions in advance. What we've done is we've condensed the questions that we felt were similar, grouped them together, and made sure we don't have any repetitions. We've tried to answer as much as possible, but if you do feel like you need something cleared up a little bit, please just submit another question to the Q&A box. It's right at the bottom of the screen there, and we'll do our best to get round to those at the end if we have time. So without further ado, I will pass you on to Nikki, who will give us a market overview.
Hi there, thanks for joining us today. So I am Head of Lettings here at ESPC, and I was just going to give you kind of an overview of what was happening towards the end of the year in the rental market. So normally the tail end of the year can be a quieter period of time, but we actually saw kind of the surge of activity that had occurred in the autumn really carry on and continue through to the end of the year. Stock levels of rental properties were really at an all-time low right across Scotland, and that led to high demand from tenants. It saw rents on the increase and the time to let dramatically declining. Scotland as a whole recorded positive annual growth across all property types, seeing the average rent now at £869 a month. Most properties were let within 20 days. And 46% of one-bedroom properties were let within a week. So if you narrow that down a little bit more to Edinburgh, again, the last quarter of kind of 2021 was super busy. Rent now in the capital is an average £1,191. Properties are taking an average of 17 days to let. Again, one bedrooms are renting the quickest, and they're only taking around 10 days. 59% of one bedrooms are let within a week, and we've even had some properties being snapped up within minutes really of being advertised. So all pretty positive stuff. The industry over the last 10 years has recorded growth, so it still makes it a really attractive market for kind of long-term investors, and as the demand continues to grow from tenants, then it looks to be a pretty exciting place to be. So all positive. Yeah.
Brilliant, thank you. And before we get started on our question and answer session, please let me introduce you to our panelists today. Sorry, I didn't do that ahead of time, but of course you've just heard from Nikki, who's head of our lettings team. We're also joined by Shirley, who is part of our ESPC mortgages team and is a mortgage broker. And then we've got Arthur, who is a solicitor from McHugh & Fraser Legal. So a nice rounded bunch of opinions and views and advice that we're going to get today. So let's start with the Q&A session. And just a reminder for those of you who are just joining now, if there's anything that you'd like cleared up or more questions to be answered, if we have time, we'll do our best to get round to any questions that are submitted in the Q&A box at the bottom of the screen. So feel free to do that at any point. So the first question, and this is for Shirley. What are the requirements for getting a buy-to-let property?
Okay, hi everyone. Right, okay, well, I suppose talking generally, to keep it fairly simple to start with, one of the biggest requirements for a buy-to-let property is the deposit, and generally speaking, this is a minimum of 25%. However, there are lenders that we have access to that will consider a 20% deposit. Now, bearing in mind in this buoyant Edinburgh market, that would be on the basis of the value, the home report value, or the purchase price, whichever is the lower of that figure. Also, your loan amount will be dictated by what is called a rental stress test. And this, in broad terms, the more gross rental you can achieve, the more you can borrow. However, these rental stress tests are dependent on your income tax bracket. Are you a basic rate taxpayer or a higher rate taxpayer? If you're a higher rate taxpayer, actually the rental stress test is tougher, and potentially the loan amount could be lower. In addition, 2-year and 5-year products have different stress tests as well. So potentially, again, you could get more on a 5-year fixed product. I suppose the key here is we can certainly help you at ESPC Mortgages if you do want to progress with a buy-to-let mortgage. Lenders are increasingly asking for EPC, energy performance ratings. Commonly being requested is E or above, the rating of E or above. Standard tenancy agreements are favourable as well. So if you're thinking about a longer term let to an organisation or a commercial entity for sublets, that can be really frowned upon. So standard tenancy agreements are the best way to go for mainstream buy-to-let mortgage. Again, desirable requirements, but not necessarily essential. Being an owner-occupier, having your own property where you are used to the finances of owning a home, lenders like that. And the other thing that they get nervous about is if you're trying to use a buy-to-let mortgage as a backdoor residential mortgage. That's the other reason that they like you to have your own property that you live in. But again, you know, there are lenders out there that would consider you not having your own property. And the other thing that's desirable is having your own earned income. A lot of the mainstream lenders ask for a minimum of £25,000. However, again, you know, there are lenders out there that will consider other income and base the mortgage on the property, the rental property that you're looking at on its own.
Thank you very much, Shirley. And our next question is for Arthur. Can you give an overview of the guaranteed rent scheme? Is that a reasonable option as it avoids void periods, repair costs, brackets above wear and tear, etc., even if the headline rent is lower?
Hello, everyone. So, yes, I mean, this is a very wide subject. The idea is that the property is rented to the local authority rather than a private tenant, and you sign a lease agreement for 3, 5, or 10 years, and then the council, your local authority, will fill the property with their tenants, who are usually people needing a home. Your return on this will be less. My understanding is that you'd get about 75 to 80% of what you would get from the market rent rate normally. So you're probably looking at less money, but obviously you have security of having property rented and getting rent for a set period of time. I also understand that the local authority would regularly inspect the property for you. They would also arrange for the maintenance. So in the end of the process, you will get the property in a good condition. And also you'll avoid paying any sort of estate agency fees. So in general terms, is this a reasonable way forward for some landlords? Yes, it is. I would say this is a good way forward for maybe landlords who are risk averse. It's a safe option. Each local authority has different arrangements for this. I can speak a little bit about Edinburgh. Edinburgh City. This is all organized by Link Housing. You can actually access easily their website. They've got a dedicated phone number and email address, and you can speak to them even if you're in the beginning of the process and you're thinking of investing into buy-to-let and maybe doing this through what it's called here in Edinburgh, PSL, which is private sector leasing. what link housing would probably like to do, they would like to go and see the property before they make you a formal offer in terms of a lease agreement. So as you carry on with your viewings, you can maybe get in touch with them, send a brochure and say, I'm thinking of getting an agreement with you guys. Would you mind to pop in and have a look and tell me how much I could expect from you? The good news is they're looking for properties at the moment in all areas in Edinburgh and all different types and sizes. I understand that you're looking for 1 bedroom, 2 bedroom and 3 bedroom flats at the moment. So there is lots of options with this. As I said, I think the best way is actually to speak to them direct and see if this is a feasible option. One thing I would mention as well in terms of apologies, a small technical issue here. One thing I would mention here, usually with BuytoLet property, you will have a mortgage over the property, and this option might not be feasible for all the landlords because a lot of lenders would probably say no to subletting property through the local authority. So this is something which you should look at as well when you're thinking of PSL. Thank you.
Brilliant. Thank you very much. The next question is for Nikki. How do you find the right tenants for your property other than doing a credit check?
Thanks. Well, most tenants are great. They pay their rent on time and they'll look after your property. But as the nature with most things, there is always an element of risk. And, you know, some tenants aren't as great. What I would say is using a professional to source your tenant should reduce this risk. So using a recommended letting agent, property manager. In the past, I found that landlords may be trying to manage properties themselves are more likely to fall foul to bad tenants. That doesn't mean that's always going to be the case, but sometimes if you are trying to look after things yourself and you're trying to juggle your own job, your family, lots of other things, then you might not have the same amount of time to offer to your property or keeping up to date with legislation. And unfortunately, some tenants might recognise that and capitalise that, and that's where the problems can arise. So use a professional, or if you want to do it yourself, really make sure you're on top of things and up to date. What I would say is certainly as part of the reference checks that we carry out, so we contact the tenant's employer and their current landlord, and we contact them rather than, you know, the tenant providing a reference. It means we contact the employer, the landlord directly, rather than maybe getting a filtered version from the tenant. So I would say go direct to the employer or landlord and actually get the information direct from them. And we also do checks on kind of previous address history, any adverse credit, and make sure there's affordability checks. Alongside all of those things, I would say your gut instinct is one of the major things. If you've got somebody who's wanting to move too quickly or trying to bypass the normal references, trying to bluster their way around, then that can sometimes be a trigger of why are they wanting to do that. What I would say is, given what I mentioned earlier about how busy the market is and the demand from tenants, you've got plenty of opportunity to choose the right tenant. So don't rush into things. If it doesn't feel right, then there's probably a reason for it. So make sure you do as many checks and that you feel comfortable, is what I would say.
Thank you. Great advice, Nikki. The next question is for Shirley. What are the charges involved in BuytoLet when it is a second property?
Okay, I'll maybe cover charges, fees, that type of thing. So I suppose normal legal fees, and I'm sure Arthur would keep your eye on that. And so much in the same way as buying a residential property, you would have legal fees involved in buying obviously a buy-to-let, the conveyancing element of that. Stamp duty, LBTT, there's again in the same way as buying your own residential property, that could well be applicable depending on the price that you purchase at. But if it is a second property, it is worth bearing in mind, and this is quite a big one, the additional dwelling supplement tax in Scotland is 4% of your purchase price. So that can add a substantial amount on to your bill when buying a second property buy to let. Obviously, I would recommend using a letting agent, and I'm sure Nikki would keep you very much right here. Letting agents tend to take a percentage of your gross rental, and I would recommend engaging with a letting agent and allowing them to keep you right in terms of regulation and keeping your property compliant. I'd also recommend speaking to an accountant, as your income is going to be subject to tax, in the way that any other income is subject to tax. And an accountant, if you speak to an accountant initially, they will potentially set you up in a more efficient way, and it's worth doing that at the outset rather than once you have got the property. You're obviously going to have maintenance costs, if the roof goes, or any of the equipment, or any of the contents that you are responsible for, and it is worth putting aside a pot of emergency maintenance money for your buy-to-let property. Landlord insurance, obviously would need to cover your building insurance as well, but having those additional pieces of insurance in place as a landlord is certainly beneficial. And of course, if you're taking a mortgage on the property, you're going to have your mortgage payments. The majority of buy-to-let mortgages that we tend to do are interest only. So these can be a lot cheaper than repayment mortgages, but you will be due the amount that you borrow at the end of the term, because as it says on the tin, it is interest only. So a lot of landlords use the buy-to-let property and the sale of that to pay off the loan amount that they have taken out in the first place. So obviously you have to be aware of any property price fluctuations to make sure that that's being covered.
Thank you, Shirley. Thanks very much. And now we're back to Nikki. What are the benefits and risks involved when purchasing a buy-to-let with existing tenants?
So you could get a great property with great tenants, or you could get an awful property with terrible tenants. So what I would suggest is that if this is something that you're thinking of doing, is that you ask lots of questions. So if you see a property that you're thinking about purchasing and it does have a tenant in situ, then ask plenty of questions from the current owner, the current tenants. If it's managed through an agent, speak to them, find out about the tenants. Do they pay their rent on time? Have they looked after the property? Are there any ongoing maintenance issues outstanding? Has anything been replaced recently? So make sure you get a really good grasp of the situation that you're going to be taking on. Of course, one of the benefits is if you're taking on a property that's got a tenant in situ, you don't have any void period. As soon as you complete your sale, then the tenant starts paying you rent. You have no void period. Also, all of the safety requirements should be in place, so you wouldn't have the expense of getting those done. However, if you were buying a property that was a vacant, it does give you the chance to get in, to do any upgrades, to do any refurbishments, to make the property look as great as it can. And it's more than likely that you would get more rent than what an existing tenant might be paying. So there are pros and cons. It doesn't seem to happen very often where a tenant stays in the property when it's sold. I think most landlords like to take back their property, do some refurbishments themselves so that they can get maybe more for a purchase price. So it does happen, but maybe not too often. But yeah, there's pros and cons for both. So whatever you would be comfortable with, as long as you ask plenty of questions so that you're clear what you're taking on if it's a tenant in situ. Yeah.
Thank you. The next question is for Arthur. How does a buy-to-let work when buying through a limited company?
So you can purchase your buy-to-let property in two ways. You can buy it as a person, and you can set up a limited company, which obviously then becomes a separate entity from you. It comes with certain benefits, but there are, as with everything, certain pros and cons as well. This is just to repeat what Shirley mentioned about taxation in Scotland. There is a tax called additional dwelling supplement, which is at 4% of the purchase price. So if you purchase property as a limited company, you will pay that tax automatically on any of the purchases before we go to benefits of buying as a limited company. Whereas if you're a sole trader and perhaps this is your first investment property, you don't have any other properties, there's ways of avoiding paying that tax. So this is something which everybody should bear in mind. Now, with regards to purchasing as a limited company, what you need to do, it's obviously to set up a company. This is relatively simple and straightforward process. You can use your solicitor to do so, or your accountant, or even bookkeeper. It's up to you. I would highly recommend to have that process done and ready before you start looking for properties, just so you're ready to go, because then you can go really quickly with your purchase process once the company is set up. And obviously you want to instruct your solicitor when making offer as a limited company rather than as you. What I would say, you most likely are going to be a shareholder and a director as well, so you'll be a company officer, and you will still have to deal directly with solicitors and accountants in the purchase process. Now, with regards to buying as a company, there are certain tax benefits. I don't want to go in depth with this, but for example, there are some gains to be made with regards to income tax. Also to mention, companies pay corporate tax, but that corporation tax is actually less. There is that safety of separating your asset, that asset and that debt from your personal wealth as well. However, this comes with a catch. Most of the time, especially if you're sort of in the beginning of investing in buy-to-let, your lender will ask you to sign personal guarantee attached to your main security deed. That means that if things go wrong, the lender will be still able to go after your personal assets. There are some possibilities to claim some expenses back as well when you run a company, and I think you can claim more than if you are a sole trader as well. And also with regards to your future designs, if you have children or maybe people you want them to pass assets to, it might be sometimes easier to do this through a company rather than from yourself. And again, some gains are to be made on taxes like capital gains tax and inheritance tax. So it all comes with benefits. However, there is no perfect way. And I think before setting up the company, what you want to do is actually to have an honest conversation with your IFA, with your solicitor, and chat about your personal situation, about your financial situation. It's important whether you're married or in civil partnership. It's important to look into your wages, salaries, your income, to make that sort of long-term decision. So as I said, it's not something to be recommended straight away. It's something you need to discuss and judge on sort of personal circumstances here. Okay.
Thank you very much.
If it helps, if anyone is thinking about weighing up the options between limited company and individual ownership, I've got quite a good fact sheet from one of the lenders, and by all means, if anybody that's participating here today would like a copy, if you are they able to email you, Karen?
Absolutely, please do. And that, just to echo that point, for anything about that we've been talking about today, please email myself at marketing@espc.com, and I can pass you over to the relevant person. So if it is the fact sheet you're looking for, I'll forward you to Shirley, or Shirley can send it to myself and I can do it on your behalf, whatever is easiest for everyone. But yeah, please feel free to drop us a line after.
On that note, I would also like to add that with regards to the lending, you probably more likely to pay higher interest rate on your mortgage if you purchase a property through a limited company. So although there are some gains to be made, you will be paying also extra money for your mortgage, for your interest, and obviously administration of the company might be more expensive. You probably will need accountant, you will need to submit your reports to Companies House. So all of this has to be considered.
Yeah, that's a good point, Arjun.
All right, thank you so much, everyone. All right, moving on to our next question. This is for Nikki, a bit more of a tricky question. What does the future of the buy-to-let market in Edinburgh look like over the next quarter?
Well, if it's anything like last quarter, it's looking pretty rosy. But certainly what we've learned over recent times is that things can just change in an instant, and markets that have been busy can become quiet, and vice versa. So it's really made predictions harder than ever when there are so many other things to be factored in. You know, what's kind of happening worldwide has an impact right here. So it's difficult to kind of predict, I would say, but certainly I've not seen any drop in demand over kind of at least probably the last 9 months, I would say. So things seem to be holding pretty steady. Just now, there are still right now not enough properties on the rental market, as I've mentioned before. Tenants are staying longer than ever before. So that's actually adding to the low stock levels. So we're not getting those properties coming back to the market, which is good news. Tenants are happy, they're staying. So that's encouraging for landlords as well. So whilst there continues to be such a high demand for good quality properties, tenants willing to stay for a long time and pay good rent levels, I can't see that changing, certainly in the next couple of months. You know, kind of when we're in March and we can review, then might give us a little bit more of an idea of what the next kind of period holds. But certainly where we're starting off in the new year is pretty positive, and I would think that we're going to continue in that vein, certainly.
Thank you. The next question is for Shirley. You've already touched on this, but you can maybe add to it a little bit. What is a deposit required for a buy-to-let, and what are other factors to consider?
Yeah, as you rightly said, Karen, obviously touched on this earlier. I would recommend 25%. 20 is possible, and we do have access to lenders that will consider 20% deposit, or better known as 80% loan to value mortgages. They are subject to that rental stress test that I mentioned earlier. So obviously the higher loan to value, you know, the rental stress test obviously needs to try and meet that loan amount as well. 80% loan to value mortgages, a lot of them were withdrawn during COVID. So again, that's why I would try and encourage you to get at least a 25% deposit. But I realise that's tough, especially in the Edinburgh market, and especially if you're having to pay over the home report value as well. Those 80% products as well tend to have those at higher interest rates. Again, not all lenders supply them, so that means that the ones that do provide them tend to make you pay a price for them. Yeah.
All right. Thank you. The next question is for yourself, Arthur. Do you think it's still profitable to invest in buy-to-let now?
Well, the short answer is yes. I think Scotland is a great place to invest, and Edinburgh in particular. And before I carry on about how great it is to invest, obviously we all been hit by the pandemic. Things are changing all the time. The rental market is becoming more and more regulated each year. And this is just to mention, obviously, Airbnb and sort of short-term leases, new legislation, which is not, at the moment discussed. Just to mention new fire regulations that just came into force, I believe yesterday. And there's new proposals about rate bands as well. That at the moment there is a consultation about this, and we're probably looking in a few years' time about something being done about this. So there is more and more regulation, and also the prices of the properties are going up all the time. And for example, in Edinburgh, you often are expected to pay premium, so that's extra money above the valuation. And as Shirley mentioned, your mortgage offer will, your mortgage will depend on the home report value. So this means that you really have to save even more probably than that 20-25% of the deposit. What it means that obviously your return, your yield will be less, and for that reason, I think the way you need to look at BuytoLet at the moment is a secured but maybe slightly longer term investment in terms of returns, and that's what everybody should do at the moment. In terms of what you should do, I would say do your research, do your homework, and do speak to your solicitor, do speak to your local estate agents, the library of knowledge. They will tell you where is best to invest in your local area, what streets are best. Please do speak to your IFA. Everybody will be helpful. And then again, I would highly recommend ESPC. It's a great platform. Do speak to ESPC. We've got advisors, and they can also connect you with right people before you make that move and make your first investment.
Thank you very much. Yes, please do always speak to us. Next question is for Shirley, and again, I think we have already touched on this as well, but I'll just ask again. What are the income tax considerations before buying a buy-to-let property?
Okay, yeah, well, I suppose the big thing is you have to declare your income, you know, on a tax return, unfortunately. But yeah, your rental profit will be taxable. And in recent years, there's been a step change on the mortgage expenses that are allowed. So traditionally, you were allowed your mortgage payment as an expense. However, that allowance has been changed in the last few years. So again, the key message here is speak to an accountant or a tax advisor about the best way to set yourself up initially, and also that long-term plan. And I don't want to keep repeating myself, but you know, potential capital gains and inheritance, as Arthur had also mentioned earlier. So yes, there are considerations, not just income as you go on, but longer-term tax implications too.
Thank you very much. And this is the final question for the pre-submitted questions, and then we will get round to as much of the questions that have came through during this webinar as much as we can before we're due to finish. So Nikki, the final question is for yourself. Is it worth paying fees whereby if there are voids, this can be covered by a policy?
So there are insurance policies that you can take out which cover your rent during any void periods. But what you would really need to consider is if paying your annual premium is worthwhile, considering, especially at the moment, the high level of occupancies we're seeing just now. So it's really a case of kind of doing the maths on, you know, if I have a month, maybe two of a void period, you know, is that going to work out what I might pay over, you know, a period of time in a premium? At the moment, as I say, it's 11 out of 12 months that are occupied. So maybe if you work that over a 5-year period, what you would have paid out on an insurance premium. Also, it's worthwhile triple checking any conditions of these policies, as they can be restrictive and I won't say reluctant to pay out, but let's just say you have to tick a lot of boxes before they can pay out. So it might sound like a good option if you're particularly cautious, but really in today's market, I don't feel that they're worthwhile. Certainly the landlords that we work with, the vast majority don't take out that insurance. If you're confident in your agent, in yourself, in your tenant, then I don't really think that they're necessarily. But if you'd like a little bit of backup, a little bit of a cushion, then they're there. But I would say do your maths, and work it out if it's really going to be working for you.
Brilliant, thank you so much. So we'll go on to our questions that have came in throughout the course of the webinar. These are open pretty much to anyone that wants to answer. If you can, please feel to bounce off one another, and we'll do our best to get as through much of them as possible. So the first one I see here is, when looking to get a tenant into a property, do you let all the potential tenants view that property first before choosing someone you think would be suitable and carry out the reference checks? From what I can see, this person has had a lot of viewings, but they've been disappointed because not a lot of them have got back in touch, which leads to wasted time. So does anyone have any advice on that?
I can jump in because I can feel your pain. As I've mentioned, there are lots of tenants. There are lots of people looking for properties at the moment, but not everybody is going to be suitable for you. Different people will have different methods. Nothing is kind of completely fail-safe, foolproof, any of those things. What we do is, so we have people that are interested in the property, yeah, I'd like to view it. Before you book in that appointment, find out some more about them, find out if they're serious. Do a video tour of your property, send them the video tour. They might actually see the layout and realize it's not for them, so that's eliminated them. They like the video, okay, ask them questions. Who's going to be moving in? What do they do? Do they have pets? Do they smoke? What's their long-term plans? So you've got an idea that it's going to be something that's going to be suitable for you. If they're ticking the boxes at that stage and they're still keen, then I would move forward to carrying out a viewing. Also, with things the way they are, we're still wanting to kind of keep contact down to a minimum. So we're not doing open viewings and 20 people are coming in at a time, and we're very much making appointments and really only doing viewings with people that are serious about the property, that you've already established and are meeting your criteria. So you've kind of narrowed it down. So really, by the time that you're doing a viewing, they and you should be quite serious about what's going to happen. So it's not foolproof, but that's kind of the model that we're following, certainly at the moment, and it seems to work. Yeah.
Great, thank you. There's another question about the average rent, and I believe this was following from your update at the beginning, Nikki. They're wondering if the average rent is for the 2-bedroom houses or 3-bedroom houses, or what property type.
So it's across all properties. But I do have some figures where I could maybe whittle them down a little bit more for you. So
I would also like to, touch on that we do have a lot of resources online as well.
Yeah, so there is. So, sorry, it was across Scotland, or was it just the Edinburgh figure?
I believe Edinburgh figure, yeah.
The Edinburgh figure, cool. So the Edinburgh figure, that was across all property types. But I can tell you the average rent for a 1-bed in Edinburgh was £813. The average rent for a 2-bedroom is £1,111, and the average rent for a 3-bedroom is £1,531. So the 1191 was an average across all property types, but that's maybe drilled down a little bit per property type, if that helps.
Brilliant, thank you so much. And just to reiterate, we do have our CityLets report that's just out on our website. So that was uploaded within last week. So all the information is up to date, and we've got a great lettings leaflet as well that breaks down postcodes and bedrooms and so on. We've probably got time for a couple more. So the next one, is it a good idea to buy a new build for a buy-to-let property?
Well, maybe I try to touch upon that point. It might be a good idea, but again, it really depends. And one thing, when you purchasing buy-to-let property, what you need to consider is also your outgoings and expenses. With regards to new builds, what you look at, there's usually a factoring fee, because the developer will usually nominate a factor. So a company looking after the development or the block, and there will be a factoring fee on the top of all other expenses. So this is something you should consider.
Yeah, and I would just say in terms of kind of preference from tenants, whether they are looking for a new build or a more traditional property, tenants are looking for all sorts of different properties. So, for some, they like the traditional features of, kind of the new town or a Georgian property, and that's what they're looking, those nice big rooms. Others like the advantages you get from a new build, so the tenants can kind of know they're more energy efficient, their bills are going to be lower, they maybe come with parking. So people will have different kind of priorities, but there's certainly enough people looking for all different types of properties. Yeah.
There is also some sort of risk with new builds to say that you don't really know how much you can expect a year because it's fresh, it's new, and sort of rates for rent are not well established.
Thank you. All right, I'll move on to another question. Is there a price difference when letting out a furnished or unfurnished property, and does it impact the duration of tenancy?
So there used to be, I think has been a kind of a bit of an urban myth around unfurnished properties, and people thought you could get less rent and that it was harder to get your tenants out, but they would stay longer. Some of these things are right, some of them are not. Generally speaking, rents are very little in difference between what you would get on a furnished and unfurnished property. If somebody is looking for an unfurnished property, then they might not have as much of an option, so they're prepared to pay the rent. So there's very little difference between what can be achieved. Whether you can get your property back is exactly the same, whether you have a furnished or an unfurnished property. They sign the same lease, it's the same notice period, if it's the same eviction process. So whether it's furnished or unfurnished, exactly the same to try and get your property back. So that's fine. Do they stay longer? Probably. People have gone to the extent of bring in all of their own furniture. They really have made it their own home. So sometimes we do find that the unfurnished tenancies are longer than those that are furnished. That doesn't mean to say that if you have for a furnished property, you can't have a tenant that might be in there for 5 or more years. So it's whatever works best for you as a landlord, I would say.
All right, final question. I believe this is all we have time for today. Sorry, but just to reiterate, we've got loads of great questions that have came in. I'm sorry I can't get around to them. I see there's quite a lot of specific questions as well, so please feel free to just email them to myself at marketing@espc.com, and we'll do our best to answer to you or point you in the right direction. And I can also see someone is looking for a contact. We do have a lot of contacts, so if you just email us whoever you're trying to find as well, we can see if we've got an email address for them. So the final question, if whoever would like to answer, is: are there many differences between short-term lets and specifically Airbnb and long-term lets in terms of mortgages and fees?
Yeah, as I mentioned earlier, lenders prefer standard tenancy, without a doubt. If you're going for a buy-to-let mortgage, it is normally the vast majority of lenders want a standard tenancy agreement, and there's model agreements in Scotland, and again, Nikki would keep you right in terms of tenancy agreements. Certainly, once you ventured into that holiday let market, that becomes more specialist, and a lot of lenders are not keen on that type of arrangement. It becomes a lot more specialist, and because it becomes more specialist, it becomes more expensive. What people don't seem to realise is if you have a buy-to-let mortgage on an existing property and you let it out for Airbnb, you are potentially in breach of your mortgage conditions. Buy-to-let mortgages are for exactly that, for letting out on tenancy agreements. So beware, if you think you can, get a buy-to-let mortgage and then holiday let it or Airbnb it, you could potentially be in breach of your mortgage conditions. So yeah, big word of warning there on holiday lets and sublets. You know, I know there's a lot of companies out there offering to do longer term leases for you, and you might think that security. However, again, you know, mainstream lenders generally don't like it. And subletting to various different people they don't like. You can get corporate lets where the company's perhaps taking it out for a member of their staff. That's more amenable to a lender. But yeah, anything other than that, you're in. Be careful, be warned. I think is the
Where's the
message.
warning? Brilliant. Does anyone want to add anything before we wrap up today? Perfect. Thank you very much. Seriously, thank you so much for everyone that's joined and participated today. There's some really great questions, and even in the chat box, people are offering advice, which is always great to see. So we really do appreciate that. Do keep an eye out for our future events. We do have a Fife event coming up at the beginning of March, which will be focused around the property market there. It will also be in a webinar format. So if you like this, then please do come back there. Of course, a huge thank you to our panelists who have given us great insight today. And like I said, do email us if you have any follow-up questions or want to kind of get more specifics on anything that we've talked about today. There will be a survey that pops up once this webinar ends. We'd be so grateful if you could fill that out, and it could help us shape future webinars for you all. And yeah, thank you again so much. And I hope you've enjoyed today.
Thanks very much. Thank you.
Thank you.
See you later. Bye-bye.
Bye.
Thank you so much. Bye for now.